So in my last video, we talked about the impact to your personal income taxes from the election, but now let's talk about the impact for business income taxes. Hi, my name is Chris Passmore and I'm with CPA Corner. So we're going to focus today on the impact to businesses, corporations, and a result of each candidate's tax policy that's been proposed so far. So there's four main areas we're going to talk about. So let's start this off. Let's just talk about the corporate tax rate. Under the TCJA, the new tax law that was issued a few years ago under the Republican administration, the corporate tax rate was reduced to 21%. And President Trump has shared that he would like to reduce this rate to 20%. And this is a stark contrast to candidate Biden. He would like to increase the income tax rate for corporations from 21% to 28%. And in addition to that, he would set a minimum tax amount for large companies, which he defines as companies with book income in excess of $100 million. And that minimum tax would be 15%. And you may be asking yourself, how is that possible? How do you have a large company with tons of profits paying less than 15%? Well, there are a number of companies out there that either have offshore or foreign operations or who take advantage of various tax credits that are available to them. This is particularly relevant for technology companies and the credit for research and development. And by having their operations in foreign countries and by taking advantage of certain credits, they can bring down their effective tax rate to an extremely low amount. You might have heard this being referred to as the Amazon rule, and the possibility that you can have hundreds of million dollars, billions of dollars in income but pay virtually no tax. An example of this would be Netflix. It was reported that in 2019 their overall effective income tax rate was 9.5%. So under candidate Biden, that would now be a minimum amount of 15%. So a big change in the overall tax rate proposed by each candidate. So next let's talk about deductions. These are the expenses that you can use to reduce your taxable income. Right now, President Trump's policy includes a lot of extensions of the existing benefits in place. Many of the things that he's rolled out in the past years had expiration dates. So things like bonus depreciation. And he would like to extend that out or make permanent. And one item that he did state he wants to expand and increase the amount of items eligible for deduction focused on meals and entertainment. That was one significant change that's happened in the past few years where companies were seriously limited in the deductions that they have for meals, for networking opportunities, prospective clients, or entertainment venues. And it sounds like President Trump would like to expand that and allow companies to get additional tax deductions for those amounts. The main deduction change that I've seen for candidate Biden relates to the deferral of capital gains tax for real estate investments. And this is called a like-kind exchange or a 1031 exchange. And how the current tax law works now, if you're an investor and you buy a real estate piece of property, you have the ability to defer any gains, any capital gains you have on that property if at sale you then use those proceeds to buy a new real estate investment that is similar in size. So instead of paying the tax on the gain from property 1, you roll that over to property 2, and then you don't have to pay tax until property 2 is then sold. Candidate Biden would like to go ahead and eliminate this deferral of capital gains for certain high-income investors. That means when they sell property 1, they would have to pay those taxes right away, even if they plan to roll that investment into a new piece of property. So that would be completely eliminated for high-income earners. So the next area that I want to talk about is for international businesses. And the primary thing right now that could change would be under candidate Biden's plan to double the GILTI from 10.5% to 21%. So you're probably asking, what's the GILTI? So the general concept here is there are U.S. entities that have certain operations offshore to take advantage of lower tax regions. For example, Ireland. You might have read that if you operate in Ireland, the tax rate there is roughly 12.5%. So the GILTI is the concept of a minimum tax on global income. And right now, that minimum tax is 10.5%. And candidate Biden would like to double that amount to 21%, and thus impact companies like Apple that do business and have all these foreign entities across the world. The last major item I wanted to talk about today is in relation to income tax credits. Right now, President Trump has not announced any significant changes to the current tax law in place for income tax credits, but candidate Biden has proposed several new or enhanced credits, primarily focused on low-income work opportunity tax credits, child care tax credits, and he would like to roll out several new items to benefit those parties. And it's a focus on, again, low income, investing in lower income areas, child care credits for employers, and things of that nature. So you can see that right now Trump and Biden have drastically different approaches. So just to sum up the underlying reason for all of this, President Trump truly believes that the focus here should be on the economy and the prosperity of business. So most of his policies are focused on getting business to be as profitable as possible, so those profits trickle down to employees, to their vendors and their suppliers, and therefore everyone will benefit when business does well. And that makes sense considering his background. He's a businessman, and he believes that when business does well, so does the entire nation. Now, this is a stark contrast from candidate Biden, who is a stronger advocate of social welfare, social justice, reducing that income gap between the ultra-high income and low income. So you can see many of his platforms are focused on creating that tax at that higher level, and then using those amounts to help pay for some other platforms to maybe assist with lower income, middle income folks. And that's why his platforms result in higher tax on high income and large companies. So I hope you found that information useful. We've got a few weeks now to the election, so hopefully this can help in your decision. If you have any questions about this information and the impact of either candidate on your business, please leave a comment below and I'll respond. And I look forward to speaking with you in my next video.